Hello and welcome. You're watching Market Cafe with me, Ankita Saxena, and with me is Snehi Shah. Snehi, an important day for the Indian markets. The MPC meet outcome is likely to come out today, but the market is really penciling in pause in the rate hikes. But first up, we'll go across to the global markets and how they performed. Well, in the US, we did see some cuts coming across the US markets because ahead of the CPI inflation data that's likely to come out today, Snehi.
Absolutely. So good morning, Ankita, and wishing a very good morning to all our viewers today. Thanks for logging into ET Now this Thursday morning. And stock futures rose slightly in overnight trading as Wall Street looked ahead to a key inflation reading that could impact the Federal Reserve's next rate move. The overnight moves followed another down session on Wall Street. The Dow Jones dropped about 191 points or almost 0.5%, while the S&P 500 shaved off 0.7%, and was the Nasdaq that was the real loser in trade yesterday because it shed 1.1%. And traders are looking ahead to Thursday's July CPI report, which could offer more insight into how the central bank's latest rate moves are affecting sticky prices. The findings could also impact the Fed's next rate decision at its upcoming policy meeting in September. Now, the inflation is expected to rise 3.3% on a year-on-year basis for July from the 3% mark in June. And along with CPI, initial jobless claims are also due today. So, US markets taking slight cuts in trade ahead of all these key data that is expected to come out tonight. And let's shift focus to Europe then. And European markets advanced on Wednesday to end in the green as traders digested China's disinflation and Italy's weakening of a surprise windfall tax on banks. Now, the Pan-European Stock 600 index closed up 0.4%, and shares of Italian banks, which had taken a tumble on Tuesday as a result of the tax, rebounded on Wednesday as the Italian government partially backtracked on this measure. The finance ministry announced late on Tuesday that the tax on net interest income would be capped at 0.1%, just 0.1% of the risk-weighted assets, which is just a 1/5 of the level that Citi had estimated it could reach. So, key positive coming in for Italian banks, and that reflected positively on the entire Stock 600 index as well. So, while we have a slightly weakish handover coming in from the US markets, European markets look positive in trade, Ankita.
That's right, Snehi. And if you look at the GIFT Nifty also, it is absolutely flat, down just 4 points, very, very flat as of now. But we'll move on. We'll do a quick crude check where the crude is at. Now, oil prices have fallen in early Asian trade as of today after reaching fresh highs in the previous session as concerns about the Chinese economy offset the positive impact of steep drawdowns in the US fuel stockpiles and Saudi and Russian output cuts. Now, remember, Chinese data had come out on Tuesday that showed crude oil imports in July had fallen 18.8% from the previous month to the lowest daily rate since January, and China's consumer sector also fell into deflation and factory gate prices extended declines in July as China is really struggling to revive demand. Now, Brent crude has fallen 20 cents. It's down 0.2%, currently at $87.35 a barrel after settling at its highest level since January 27 in the previous session. WTI has fallen 23 cents or 0.3% to settle at $84.17 a barrel after settling at its highest since November of 2022. So that's where the crude is at.
Absolutely, and with that, let's also take a look at all the important cues that you should be keeping on your radar today. And obviously, we have the RBI monetary policy decision today. All eyes will be on the RBI meeting outcome, the MPC meeting outcome, and the street is largely penciling in no change in the rate hikes. They're penciling a pause, and they're also expecting the RBI to maintain its withdrawal of accommodation stance. Moving on, then, we've also got global cues to watch, and on that front, you've got the US CPI numbers as well as the initial jobless claims numbers coming in today. On the earnings calendar front, then, on the Indian markets on 10th August, you've got Grasim as well as Hero MotoCorp. These two companies will be declaring their Q1 numbers today. Followed by that, tomorrow, you will have Apollo Hospitals as well as ONGC declaring their results. On the corporate action front, then, the board of India Bulls Real Estate will consider fundraising today, and KRBL will consider buyback of equity shares today. Let's look at the action in the primary markets as well. And on the IPO front, you've got TVS Supply Chain Solutions. The IPO for that will open today for subscription. And on the other events then, Rajnikant's Jailer will release today. This is a highly anticipated movie of Rajnikant. And let's see how that fares at the box office then, Ankita.
Absolutely, that is also an important event, at least for all the Rajnikant Indian fans, besides the RBI policy, of course. But moving on to global markets then, US President Joe Biden signs executive order to prohibit investments in China. The order is aimed at preventing American capital and expertise from helping China develop tech that could support its military modernization. Important to note that the measure majority targets private equity, venture capital, and joint ventures and greenfield investments.
And Wewrok warns of a possible bankruptcy in what seems to be a reversal of fortune for the shared workspace provider. Backtracking 4 years ago, the company was among the world's most prized startups, valued at $47 billion. The SoftBank-backed company has been in turmoil ever since its plans to go public in 2019 imploded after investors recoiled at its hefty losses, corporate governance lapses.
And shifting focus to some global earnings then, Disney delivers a mixed set of Q3 results. However, the top line missed the estimates. Company's park segment top line grew 13%. Meanwhile, the subscribers fell to 146.1 million, led lower by a 24% fall in Disney Hotstar subscribers. Chinese tech giant Sony's Q1 profits stumbled 31%. However, movies division showed some softening due to lower sales and higher marketing costs.
And let's get you the latest from Italy, where the government has backtracked its recent windfall tax on banks, saying it would introduce a cap to limit the impact for many lenders as it tries to calm a rout that wiped out as much as $10 billion from the bank's market value. The finance ministry clarified that the tax could be capped at 0.1% of the assets.
And well, it seems like the world's second largest economy is facing its own set of challenges. Now, consumer prices in China have declined for the first time in over 2 years, down 0.3% on a year-on-year basis in the month of July. Well, my colleague Vikram Oza is here with all that's gone wrong with Beijing and why its spillover will impact the world.
It seems increasingly clear that the world's second largest economy is deflated, quite literally at that. China's economy has slipped into deflation as consumer prices have declined for the first time in over 2 years. The Consumer Price Index, CPI, has declined 0.3% on a year-on-year basis in the month of July. So the question is, what went wrong with the world's second largest economy? The answer lies in how the world recovered after the COVID-19 pandemic. Most developed countries have seen a significant boom in their consumer spending after the COVID-19 restrictions had been relaxed. But businesses struggled to keep up with that surge in demand that eventually led to some supply constraints and a spike in prices of goods. But China followed a different kind of script. China imposed the harshest restrictions during the COVID-19 pandemic. Dubbed the Zero COVID policy, it dampened demand and it led to a steady decline in consumer prices. Now the big question is, why should the world worry about deflation in China? Remember, China is one of the largest producers of goods and services in the world. An extended period of deflation in China can impact manufacturers in other countries rather negatively because cheap Chinese goods make their way to different parts of the world. Moreover, it could hit Chinese businesses, it could hurt their profits, which could translate into job losses and higher unemployment. The fall in demand could also hit global exports to China, as it is one of the world's largest marketplaces for energy, for raw materials, and the like. All of this indicates that China is yet to recover fully from the effects of the COVID-19 pandemic. And frankly, it's not just deflation. Recent export-import data suggests that Chinese exports have fallen by 14.5% year-on-year in the month of July, and their imports have also declined 12.4%. It is fueling concerns that China's growth could slow down even further this year. China's property market as well in a bit of a turmoil since the collapse of the real estate developer Evergrande. So what happens next in China is going to be crucial for the world. We are, after all, talking about a slowdown in the world's second largest economy. It's bound to have big ramifications for the entire world.
All right, and the Reserve Bank of India's monetary policy meeting is going to conclude today. And according to a poll conducted by ET Now, 100% of the respondents believe that a pause in interest rate hikes is in store, and 80% of them believe that RBI will revise India's inflation target. It is important to note that the said expectations are coming at a time when prices of food products are on the rise. My colleague Ankur is joining us to tell us what we can expect from the MPC meet outcome today. Ankur?
The best way to understand the expectation is by doing a poll and to ask the market participants what they are feeling, and hence we have done an ET Now poll on what are the expectations on repo rate hike this time, and 100% respondents has said that this is going to be a pause kind of a policy and there is no expectation on rate hike. The second question which we asked was on stance, which has been much debated, and we got a response on the stance as well, that withdrawal of accommodation may be retained by the MPC this time as well, despite the fact few of the MPC members has already questioned why RBI is keeping that stance. Apart from that, one more pertinent question is about when RBI is going to cut rates. Yes, cut rates. Now, this expectation was far wide if you talk about the last policy, but since we have done poll this time, we have got a response that Q1 of FY25 there is an expectation that RBI may start cutting rates. The other respondents said that by end of FY25 there is a chance that RBI may do so, and 20% responded that they can't comment on this matter. Apart from that, the last question which we asked to the respondents was regarding the projections of inflation. Will there be tinkering this time? And we have got response in favor that RBI is likely to revise inflation target this time. And as far as the broad expectations are concerned, we need to watch that whether or not there is going to be a hawkish stance by Reserve Bank of India, downside risk to CPI, since vegetable and cereal prices have spiked up, and after that the expectation has come that Reserve Bank of India may tinker the CPI trend which has been given in the last policy. Apart from that, the GDP expectations is something which needs to be seen, whether or not there is a revision in GDP target. And lastly, there are always announcements outside the policy which includes CBDC, what is the status on digital rupee, and other policy announcements which needs to be watched out this time.
See, food inflation has two components. So one is vegetables, which are very volatile. And I think if rains remain okay, I think vegetable inflation is bound to come down in one or 2 months, particularly tomatoes or whatever you have. I think the worry is on the part of cereals, which is rice, wheat, pulses, spices. I think these have been sticky. So from a central bank's perspective, a transitory hike in food inflation doesn't bother them. I think when the prices become sticky and the inflation becomes sticky then I think it becomes a concern, because then it starts spilling over to the other sectors and becomes generalized.
With the inflation projections also, I think what is the estimate for GDP for the current financial year? Does he maintain the same numbers that he did in the previous conference is going to be equally pertinent as well. So I think the next 2 months are equally going to be very, very important as far as the progress of monsoon goes. Because if there is a significant amount of shortage, obviously I think it will lay an impetus to food inflation going forward. And therefore, I think the RBI would like to watch what probably happens over the next couple of months and statements around data points on how these entire aspects will get played out.
And well, all eyes on the MPC meet outcome that we will be tracking very closely for you. But with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we go domestic. Back here watching Market Cafe. Asian markets have opened up. Let's quickly go across and take account of how the Asian markets are faring for now. Well, the Asian markets are largely opened up in the red. It is ahead of the CPI numbers that are likely to come out from the US. Well, in Japan, we did see the wholesale inflation rate that slowed to 3.6%, down from the revised figure of 4.3% in June. Nikkei is absolutely flat as of now. It opened the day in the red, but has inched up a little, but it is absolutely flat, though showing in the green. Let's quickly go across to other markets in Asia as well. We will see Shanghai probably. Shanghai is right now in the green, absolutely flat. Shanghai also had started the day in the red, has inched up a little, but is absolutely flat again, like the Nikkei. We also have Hang Seng that is down 140 points as of now. Kospi also flat, but in the red, down 0.4%. And we also have ASX 200 that is absolutely flat again. It is in the green, up just 5 points, and GIFT Nifty again absolutely flat, hinting towards a rather tempered start for the Indian markets as well, because if I see the US futures also, it is in the green, but very flat, directionless. Of course, we have the big event, the CPI numbers that will come out today, and it is hinting towards a rather tempered start for the Indian markets. That could be reversed, of course, after the MPC outcome today.
Absolutely. Hi there and welcome back. You're watching Market Cafe on ET. Now let's move on with the show then. And equity mutual fund inflows in July 2023 declined to 7,505 crore rupees from 8,254 crore rupees in June. This is based on data coming from AMFI. Exchange traded funds or ETFs also experienced an outflow of 353 crore in July compared to the inflow of 3,402 crore in June. My colleague Sharad Dubey is here to break down the numbers for us. Sharad, take it away.
Well, yes, July's AMFI data is out and the SIP numbers have reached the record high levels and have gone past for the 15,000 crore monthly SIP levels, and this is for the first time ever this has happened. Now this indicates a very strong interest amongst the retail participants. Apart from that, the equity inflow segment also, if you look at it, it has been very strong and is above the 7,500 crore mark for the second straight month. Now looking at the inflows itself, especially in the mid cap and the small cap funds itself, we have seen record stock flows coming for the sixth straight month, and also record numbers coming especially for the small cap fund with roughly more than 4,500 crores of inflows being reported. Apart from this, also the equity as well as the total AUM levels of the entire mutual fund industry are at the record high levels. Now looking at the impacting of the factors, we look at it, the overall inflows have been actually impacted of inflows because of the liquid funds with more than 60,000 crores of inflows coming in. Now do remember, these are the adjustment coming in from the treasuries because of the institutions. Apart from this, also we look at the entire equity segment now that has been getting positive inflows for the 29th straight month, and also arbitrage funds saw buyers coming in for the 4th straight month. Apart from this, also the important factors, if you look at it, NFOs added roughly 6,700 crores of inflows via 17 schemes in the month of July.
Thank you so much for all those details, Sharad. Moving on then, Adani Enterprises is mulling an exit from its joint venture with Wilmar, reports suggest. Now, the set plans are to offload the entirety of 44% stake in the company. Let's go across to my colleague Ashesha to understand what it means for the flagship entity and its debt profile going forward.
Well, yes, reports suggest that Adani Enterprises is looking to sell its stake in Adani Wilmar. The company, of course, has gone ahead and clarified that they cannot comment on market speculation, but let's understand what the implications could be if at all this transaction goes through. Adani Enterprises currently holds about 44% stake in Adani Wilmar, which at the current market price is valued at about 22,000 odd crores. So let's understand what the implications could be if this transaction goes through. Adani Enterprises, as on the 31st of March, had long-term debt of about 34,100 crores and external debt to the tune of 27,800 crores. Assuming that the company utilizes the entire 22,000 crores proceeds that it receives from sale of 44% stake in Adani Wilmar, the long-term debt will fall from 34,100 crores, it will fall drastically to about 12,100 crores. External debt, meanwhile, which stood at about 28,000 odd crores, that too will fall drastically to about 5,800 crores. Let's also look at some other parameters then. External debt to equity ratio stood at about 0.73 times as on the 31st of March 23. If this transaction goes through, external debt to equity ratio will fall from 0.73 times. It will fall substantially to just 0.15 times, and hence we could see positive implications on the company's debt profile. Another question is whether the company is trying to divest and sell out its non-core assets to focus on core assets. So the company is primarily into mining, industrials, transport and logistics, and energy and utility. And the company is into FMCG business through Adani Wilmar. So it looks like the company is selling out its non-core assets and focusing on its core assets. And of course, on the back of this transaction that could probably take place, company's debt profile could also improve substantially.
Alright, thanks Ashesha for all those details, but let's go across to my colleague Winnie then. And Winnie, take us through the company profile of Wilmar and which are its core businesses and what other joint ventures do they have globally?
So we've always heard about Adani Wilmar. We know the Adani Group, but what is the Wilmar Group? What is their Adani Wilmar and Wilmar JV that they have? What is that? What is Wilmar International? What is their portfolio looking like? Let's take a look at that. And when you look at it, Wilmar International is actually a Singapore-based food business company, agri-business company is what they are mainly into, with investment holding company with more than 300 subsidiaries, a lot of JVs that they have as well. And when you look at their portfolio and what they actually are engaged in, they engage in the business of oil palm cultivation, oil seed crushing, edible oil refining, sugar milling, refining and manufacturing of consumer products, specialty fats, oleochemicals, biodisposables, fertilizers, as well as flour and rice milling as well. So their portfolio is very interesting, a large portfolio coming in, especially in terms of the oil palm cultivation as well. And when you look at the JVs that they have across the world and across the globe, they have JVs with a lot of countries with a lot of companies. Now, some of them and some of the important ones and that I'm going to take you all through in terms of Wilmar International's JV with the other companies across the globe. When you talk about it in China, they have a JV with COFCO, which is the main business of that company is to produce wheat flour, soybean oil, as well as other products as well. In China, they have one more JV that is Luhua, and that is the business of manufacturing edible oil as well. Similarly, they have one more JV. So, 3 JVs in China, that is where, and the last one is with AB Maori China, which is also in the business of manufacturing additives. The company is producing and selling food of whole wheat breads, pre-mixed flour, color sesame oil, cake emulsifiers, baking powder, baking spices, and other functional additives as well. So yes, that's how it is in China. They have 3 JVs. Wilmar International has 3 JVs in China. They have a JV in United Kingdom as well, which is with Wewrok International Limited, and that's in the development of nutritional food, feed products and marketing of this as well across the globe. Singapore also, they have a JV with Clariant, which is in the business of chemical preparations as well, manufacturing of chemical preparations. In Netherlands, it's with ADM, which is a leader in global nutrition, who unlocks power of nature evasion as well as create a combined ingredient and flavor for food as well, beverages, supplements, animal feed and more like that. And India, so we do know that they have a JV with Adani Wilmar. So Wilmar International and Adani Group, that's the JV over there, and that is mainly in terms of edible oil, industry essentials, food and FMCG business. So when you look at Wilmar International's portfolio, it's aligning with what the company mainly does as well in terms of palm oil cultivation, where they look at oil seed crushing, milling, wheat flour. Most of the companies across the globe where they have JVs with are involved in such manufacturing or such processing as well. And similarly, Adani Wilmar also, the major and largest chunk is edible oil as well. So interesting to know what Wilmar actually does, and that part of Adani Wilmar, what is Wilmar doing in this business, is something very interesting to know.
All right, thank you for all those details, Vinny. We'll move on to another major, which is L&T. At the L&T, the AGM of the incoming CEO, S.N. Subramaniam, had spoken with ET Now, and he shared his outlook for the growth in India. Here's an excerpt.
Challenges will be there when you run a conglomerate like this. Challenges could be environmental, supply chain, logistics. This unknown diseases like COVID suddenly shutting down everything is a challenge. But I think we have gone through all that, so I think there is a lot of learning. There's a lot of understanding of some of these things. Various mechanisms have been evolved. And it's good to see that the people at the company and the The balance sheet has got the strength to manage many of these things. And therefore, I think we are reasonably confident with our size and the various risks and other apparatus which you have within the company that we can manage many of this. These are part of life, and that's what you got to navigate, and that's why you're sitting on the table.
So in terms of guidance for the rest of the year, which sectors or which verticals are you bullish on, and which ones do you think you will double down on?
I think we are given the guidance at the beginning of the year. We continue to stick to that. Essentially, I feel hydrocarbon will do well, heavy civil will do well, water projects continue to do well, and L&T Finance and LTI Mindtree also does well. And therefore, we are broadly positive and optimistic that we are in good shape, and quite optimistic about the way the economy is growing both in India and in the Middle East.
All right, that's the word coming in from L&T CEO. But with that, let's quickly slip into a very short break. On the other side, we'll take you through a list of all the stocks that you should be keeping on your radar for today's trading session.